Okay, so I'm so sorry. I just forgot to press the record button. Cool. So we were discussing what all costs are included when you are trying to calculate the cost of inventory, because initial recognition always happens at cost. The same principle that you would have studied in non-current assets applies to inventory also. Any cost which is incurred to bring the asset to its current location and working condition is included in the cost of the asset. So I am Amul and I want to make cheese for which the raw material is milk. I am purchasing milk at the rate of 50 rupees per liter. Then I will be paying some amount, some money to a transporter. Okay. When I pay money to a transporter, why am I paying him that amount? That amount is incurred to bring milk from the transporter's location to my location. Unless I incur the transportation cost, I will not be able to produce anything. So that cost is necessary for the manufacturing of cheese, which is the final product. So that cost will be included in the cost of inventory. Then when this milk is processed using machines, I might have to heat it. So I will spend, LPG gas. That cost will be included. Then in a machine, I will add other ingredients. The cost of the other ingredient will be included. Then when the machine works, it will consume electricity. Maybe it runs for 2 hours to produce a slab of cheese. So the cost of running the machine for those 2 hours will be the electricity cost and other charges. Then wages of workers for 2 hours. Basically, if there is a worker who is actively involved in production, the labor cost will also be included. Say Satyamit is working on cheese production. His per hour rate is 2000 rupees. So when he works for 2 hours, how much amount do you have to pay him? You have to pay him 4000. So basically, direct labor cost, direct expenses, production overheads like electricity, heating cost, and all of that, and any other cost which is basically a part of the cost of conversion will be included in the overall cost of that particular item. Cost is not just the purchase price, cost includes all of these things also. And how is inventory valued at the end of the year? At the end of the year, inventory is valued at lower of cost or net realizable value. What is net realizable value? Net realizable value is estimated selling price minus estimated cost to sell. Okay. Whenever you are looking at inventory, remember initial recognition at cost, subsequent measurement at lower of cost or net realizable value. Okay. We understood what are the components of cost. Okay. And we understood how is net realizable value calculated. Now, when you are calculating the cost of any item or cost of producing one particular item, make sure that you include all the ingredients which are necessary to bring it to its current location and working condition. Okay. Now, this is one basic idea. Of course, we'll be required to look at some calculations here and there in terms of cost calculation, but this basically forms the ground rule in terms of deciding how exactly are you going to estimate the cost of inventory. एक बार वो आपने calculate कर लिया, then the questions in the exam might ask you compare the cost with net realizable value and help in inventory valuation. So that is how most of the questions in your paper are structured. We'll be doing a couple of questions from the kit, and then we'll be looking at some of the questions from the study hub. Okay. बहुत अलग अलग टाइप के क्वेश्चंस आर पॉसिबल फ्रॉम दिस टॉपिक. सो लेट्स सी how much of these can we solve. Okay, these are kit questions that I am specifically taking up. Okay, chaliye. iPhone is Manas, right? Or is it Mansha? Who is iPhone? ठीक है. Have a look at this. Which two of the following statements regarding Boani Company's inventory are true? There are six options. Buani Company manufactures cycling equipment. It has a number of specialized frames in inventory which cost 20,000 to manufacture. These frames were manufactured following an order from a customer at an agreed price of 30,000. Due to recent technological advances, the current cost of manufacturing such frames is estimated to be 15,000. Buani Company also has inventory of 3,000 pedals with a cost of 20. they have become damaged. If Buani company spends $5,000 to repair all of them, they could be sold for 21 each. Now, first thing is that there are two items in inventory. There are frames and then there are pedals. You have to calculate the total inventory value. Okay. So let's go item by item. Inventory should be measured at lower of cost or net realizable value. Okay. So let's talk about frames first. Frames. Okay. Inventory should be valued at lower of cost or NRV. Do you agree that cost is the historical cost amount that you have already incurred? ठीक है अब यहाँ पे देखो it has a number of specialized frames which cost 20,000 to manufacture. ठीक है so historical cost of manufacture, how much? 20,000. These frames were manufactured following an order from a customer at an agreed selling price of 30,000. ठीक है agreed selling price of 30,000 means it has to be net realizable value. में क्या आता है? Net realizable value is estimated selling price minus estimated cost to sell. ठीक है so this is 30,000. Now, due to recent technological advances, the current cost of manufacturing is estimated to be 15,000. See, they are saying current cost of manufacturing. What does this mean? Pay attention. If manufactured right now, we will have to spend 15,000 for manufacturing. Okay. If manufactured right now, we will have to spend 15,000 for manufacturing. Okay. This is estimated cost, not yet incurred, hence not relevant. Okay, when we say cost, it is always historical cost, which is 20,000 in this case. Inventory is valued at the lower of the two, so 20,000. This 15,000 was given to confuse you, huh? Please remember. It is yet to be incurred, so it has got no relevance in your calculations. Buani company also has inventory of 3,000 pedals with a cost of 20 each. These have become damaged. If Buani company spends 5,000 to repair all of them, these could be sold for $21 each. Okay. What is the second item? The second item is pedals. Again, inventory should be valued at lower of cost or net realizable value. What is cost? 3,000 pedals with a cost of 20 each. 3,000 pedals at a cost of 20 each. Okay. And what is the second thing? They have become damaged. If Buani company sells them, if spends 5,000 to repair, these could be sold for 21 each. Net realizable value is estimated selling price minus estimated cost to sell. How will I consider this? Estimated selling price. कितने में बेच पाऊंगा? I'll be able to sell it at 21. 3,000 pedals, each at 21, and the cost to repair each one of them is 5,000. So 3,000 into 21 minus 5,000, 58,000. ठीक है so 58. Pedals should be valued at 58,000. Frames should be valued at 20,000. ठीक है so they had asked you to choose two options. You did it shanti se, you did one by one, and you got your answer. ठीक है never rush, always take your time. You will land at the right spot. ठीक है चलो, are you all with me?
Yes, sir.
Okay,
Yes, sir.
let's do. See, in FR, people call them theory questions, but in my opinion, these are conceptual questions. Like this is a numerical one. What we'll be doing now is a conceptual one. ठीक है। IAS 2 inventories specifies expenses that should be included in year-end inventory values. Basically, we know the principle amounts incurred which are necessary to bring the asset to its current location and working condition. ठीक है, which are these? Marketing and selling overhead, variable production overhead, general management overhead, factory management overhead allocated to production, cost of delivering raw material to factory, abnormal increase in overhead charges caused by unusually low production levels due to exceptionally hot weather. They want you to tell three costs which are to be included in the cost of the inventory item. ठीक है. Think about the basic rule that the amount incurred should be necessary to bring the asset to its current location and working condition. ठीक है. अब look at this one, variable production overhead. I think this for sure relates to production, so you will have to include this.
Yes, sir.
ठीक है. Then general management overhead, no. Then marketing and selling overhead,
No.
no. Factory management overheads allocated to production.
Yes.
Cost of delivering raw material to factory, yes. Raw
Yes.
material will come to factory, only then it will enter production process, which is why it should be included. E should be included. Then abnormal increase in overhead charges caused by unusually low production levels. This relates to allocation of overhead, so not so relevant. And look at option D. What is option? Sorry, factory management overhead allocated to production. Why does factory exist? Factory exists for production. All the production happens inside the factory. So cost incurred in the factory is directly connected with the overall output, right? So factory में जो भी activities are happening, these are necessary for the final product to get ready, which is why option D will also be included. A, C, and F are not correct options. ठीक है. So cost of factory management, to run the factory, what all costs are you incurring? You bring those here. ठीक है. Have a look. Tell me if there is something you want me to clarify. Mansi, Mehak, Hema,
So just I wanted to understand why F should not be included. I'm little confused there.
why what should not be included?
That is again not, I mean, relating to production only, no, sir. Oh,
Option
like,
F.
yeah.
Option F basically relates to this is abnormal increase in overhead charges caused by unusually low production levels due to exceptionally hot weather. What has this got to do with production? And have they mentioned which type of overhead charges are we talking about?
Okay, they have not specified anything.
They have not specified anything, right? So that has, we cannot just straight away assume that these charges relate directly to production, right?
Yes.
है ना?
Yes.
Okay. Mehak,
Yes, sir. I'm just looking at it right now. If I have any doubt, I'll let you know.
ठीक. There are some very, very interesting questions that, will follow up where you will be expected to perform the calculation. So, मतलब अच्छा खासा numerical exposure also will be there. ठीक है. Let's look at the next one. I'll give you some time to think about it and then we'll do it together. I'll give you 2 to 3 minutes to solve this. And then, of course, I will be showing you how the calculations are done. ठीक है. Take 3 minutes because that is the time I want you to allocate during the exam for each MCQ. Assuming that you have watched the recording, ठीक है, you know what inventory discussion is all about. Carefully look at this question. ठीक है, take 3 minutes to do it. Neville has only 2 items of inventory on hand at its reporting date. they have asked you always remember to read the requirement first. What should be the total value of these two items of inventory in the statement of financial position? Total value of inventory they want. But item 1, material costing 24,000 bought for processing and assembly for a customer order, which is a one-off order. You don't do this production regularly, you're just doing it once, which is expected to produce a high profit margin. Since buying this material, the cost price has fallen to 20,000. Okay. Now, a machine constructed for another customer for a contracted price of 36,000. This has recently been completed at a cost of 33,600. It has now been discovered that in order to meet certain health and safety regulations, modifications at an extra cost of 8400 will be required. The customer has agreed to meet half of the extra cost. Okay. Now, you want to calculate the value for both items of inventory. Now, item 1, in my opinion, is a tricky area. Why am I saying that? Let me take you to the discussion. If you have watched the recording carefully, you will remember that the rule for raw material was slightly different. Material for use in production are not written down below cost unless the cost of finished products will exceed net realizable value. Say, for example, there is raw material which was purchased for 40 and the NRV of the raw material is 37. Now, usually the rule for inventory valuation says inventory should be valued at lower of cost or net realizable value. Here, the net realizable value is 37,000. Okay. Now they are saying that inventory should be valued at lower of cost or net realizable value. Ideally, you should value at 37. But this logic does not apply to raw material. What is the rule here? If the FG, that is finished goods, in which raw material is used, is expected to sell below cost, that is, we expect a loss on the sale of finished goods, then we must value raw material at lower of cost or net realizable value. Otherwise, we will continue to show the raw material at cost. Okay. So, this is the rule that I will be taking to our current question. What is the rule? For other inventory, we do cost or NRV, but we don't apply this logic to raw material. Okay. If the finished goods in which the raw material is used is expected to sell below cost, that is, we expect a loss on sale of finished goods, then we must value raw material at lower of cost or NRV. If you observe the first one, material costing 24 was purchased to be used in a one-off order, expected to produce a high profit margin. Okay. Expected to produce a high profit margin. Will it be sold at a loss? No, it will not be sold at a loss. Since buying this material, the cost has fallen to 20,000. Okay. Sorry, the market cost price has fallen to 20,000. The value of material has fallen to 20,000. That is, NRV is 20,000. Cost is 24,000. But in this case, we will not take lower of cost or net realizable value, because the final finished goods is not expected to be sold at a loss. Since the final finished goods is expected to be sold at a profit, we will not bring down the inventory valuation to lower than cost. Okay. So item 1 will be valued at 24,000, which is cost. Okay. Are you with me, all of you?
Yes, sir.
ये unusual situation है. Since childhood, we have been hearing the word cost or NRV, cost or NRV. This is where, it gets a little different. Okay. Now look at item 2. A machine constructed for another customer for a contracted price of 36,000. This has recently been completed at a cost of 33,600. It has now been discovered that in order to meet certain health and safety regulations, modifications at an extra cost of 8400 will be required. The customer has agreed to meet half of the cost. ठीक है. Overall cost of modification is 8400. ठीक है. Customer is going to meet, or customer is going to bear half of this cost, which is 4,200. Okay. That means the burden of the remaining 4,200 is on the company. Okay. So NRV, which is estimated selling price. What is estimated selling price? A machine constructed for customer has a contracted price of 36,000. Estimated selling price 36,000 minus estimated cost to sell, which is half of 8400 minus estimated cost to sell 4200. NRV कितना हो जाएगा? Tell me. 36,000 minus 4200, 31,800. Correct? Okay. And what is cost? 33,600 if I'm not wrong. Yes. The cost to complete it is 33,600. So what should you choose? Here, item 1 will be valued at 24. Item 2 will be valued at 31,800. Okay. So total value of inventory
55,800.
24,000 plus 33,600. How much is that? 57,600. Sorry, not 33,600, 31,800. देखो ये mistake होता है. You have done the right calculation, but you get so carried away with your thoughts that you punch in the wrong answer. You should not do that. 55,800. ठीक है? Have a look. Read item 1 and item 2 का detail में explanation. Okay. Any questions?
No, sir.
Okay. Mehak, Mansha, Mansi, anything you want to ask?
Um, no.
No, sir.
Okay. थोड़ा सा अलग है. This question was slightly different. So all the more reason for you to pay extra attention. एग्जाम में if something like this comes, you should be equipped to tackle that. ठीक है, चलो. At what cost should Mario value this inventory in its financial statements? ठीक है. Now I will give you again 3 minutes to solve this question. Go through it, think about it, then try to solve, then we'll do it together. ठीक है, 3 minutes. At what cost should Mario value this inventory? Mario has incurred the following cost in relation to a unit of inventory. Raw material cost 1.5, import duty 0.4, direct labor 0.5, subcontracted labor cost 0.8, recoverable sales tax 0.2, storage cost 0.05, production overheads per unit 0.25. There was a problem with the first batch of production, so abnormal wastage cost of 0.10 per unit have also been incurred. Okay, now what all items or what all costs should be included? Let's start one by one. Should 1.5 be included? Yes, that is the purchase cost. Import duties are non-refundable taxes. These should be included. Direct, so 1.5 plus 0.4, 1.9. Direct labor is 0.5.
Yes, it should be.
So that should be included. It is a conversion cost. You are at 2.4. Then subcontracted labor cost should also be included, necessary for production, 3.2. Recoverable sales tax, no, only refundable taxes are included. Storage cost. Should you include storage cost? Specifically excluded, not concerned. And production overheads, necessary for production, so should be included. 1.5 plus 0.4, 1.9. 1.9 plus 0.5, 2.4. 3.2 plus 0.25, 3.45. ठीक है. So this is a typical question which basically tests you on your knowledge of what items have to be included in inventory cost. Storage cost has got nothing to do with the production activity. They are incurred once the inventory is ready. You don't incur it before that, you incur it after the inventory is ready. So nothing to do with inventory. ठीक है, देख लो. If you have any question, let me know.
Should we consider this abnormal wastage cost?
No, abnormal wastage cost is never considered. It is specifically excluded. It's not connected with production, right? It's not. Also, it is not incurred necessarily every time. No, this is a one-off cost. It's not incurred every time.
Yes.
ठीक है, चलो. One final question from the exam kit. ये भी इंटरेस्टिंग है. On 30th September 2004, Razor's closing inventory was counted and valued at its cost of 1 million. Okay, so what is the cost? Cost is 1 million. This included some items of inventory which had cost 2,10,000 and had been damaged in a flood on 15th of September. These are not expected to achieve their normal selling price, which is calculated to achieve a gross profit margin of 30%. Okay, the sale of these goods will be handled by an agent who sells them at 80% of the normal selling price and charges Razor a commission of 25%. So, closing inventory on 30th September 2004. How much is that? That is 1 million. Okay. Now they have written this included some item of inventory which had cost 2,10,000. ठीक है? Included in above is an inventory item with cost of 2,10,000. ठीक है? So what I have now is other inventory excluding the above. 7,90,000. ठीक है? This is other inventory. Now let's talk about this 2,10,000. These are not expected to achieve their normal selling price, which is calculated to achieve a gross profit margin of 30%. So this is analysis for inventory with cost of 2,10,000. ठीक है? There, what is the plan? Usual gross profit margin is 30%. Usual gross profit margin is 30%. Okay. Margin is always calculated as a percentage of sales price. ठीक है? So sales price 100, margin, that is gross profit is 30. So cost of goods sold is 100 minus 30. So this is assumed. These are assumed numbers. Okay. Now in your case, what is the cost? The item which was damaged had a cost of 2,10,000. So what would be its normal selling price? Normal selling price is, sorry, cost of goods sold here is 2,10,000, right? Cost of the damaged item is 2,10,000, which means what will be the normal selling price? 2,10,000 into 100 upon 70, that is 3 lakh. How did I get 3 lakh? 3 lakh is equal to 2,10,000 into 100 upon 70. ठीक है? This is the normal selling price. The sale of these goods will be handled by an agent who sells them at 80% of the normal selling price. So, what is the estimated selling price of damaged goods? See, normal selling price is 3 lakh. This is 80% of normal selling price. Normal selling price into 80%, which is 3 lakh into 80%, that is 2,40,000. ठीक है? This is your normal selling price, and he charged a commission of 25%. So estimated cost to sell 2,40,000 into 25%, which is 60,000. Make sense? है ना? So what is NRV? NRV is 2,40,000 minus 60,000, which is 1,80,000. So this inventory worth 2,10,000 will be valued at what? Inventory of 2,10,000 will be valued at 1,80,000, and other inventory is already 7,90,000. So my total inventory will be 7,90,000 plus 1,80,000, that is 9,50,000.
9,70,000.
70 होगा, कितना होगा? I think it will be 70, है ना?
Yeah.
So this is 9,70,000. Very different question, very, very tricky if you don't pay attention to every single line. The key to success in questions like this, pay attention to every single line and do it patiently, don't rush. ठीक है? एक बार देखो तो read the solution properly once. ठीक है,
Yes, sir.
स्क्रॉल देख लो.
एक बार क्वेश्चन दिखाओ ना सर.
श्योर. ठीक है, चलो.